Hi there, Phil Ratcliffe with Rebel Financial. Thanks for tuning in to another one of our live streams. We've got a very special broadcast this week. We've got Bob St.Germain with Corporate Finance Associates, CFA for short. Thanks so much, Bob, for being here today.
Well, thank you, Phil.
Sharing a little bit of your wisdom with us.
Thank you, Phil. Appreciate the invite.
So I don't do this a lot, but I wanted to do a little bit of Bob's background because it's impressive. And I actually met him because he's a West Point graduate, and one of my other friends had said, well, you guys both went to West Point. I got to introduce you to Bob. So he's a West Point grad. He went infantry, so he chose the hard leadership route, airborne, and then was actually Special Forces in the 11th Group. And then after that went into a corporate role with Polaroid, Northrop Grumman, Hall of Fame, and NSI before coming to CFA. So I think it's very impressive that CFA hires people with such credentials like you. And then it just, one of the things that I really learned about West Point, I think other people get there, is just like the ethics that's just built into there about doing the right thing. And when we think a lot about doing business and even sales transactions and stuff a lot, I think that our finance industry's gotten a bad rap. And we need good people like us out there representing and doing a good job. So I think it's very unique, Bob, that you're in an industry that most of us don't hear a lot about. And that's mergers and acquisitions. So we'll let you explain to everybody kind of what you guys do.
Okay, very good. Well, thank you again for the invitation to join you today. Corporate Finance Associates, we are enjoying our 60th anniversary this year. We were founded in 1956. We're very unique in the industry. It makes us essentially the oldest player within the middle market as an investment bank, and I'll explain what that means. Essentially, an investment bank is an entity to complement the work of commercial banks. It deals primarily with the equity side of the balance sheet. We provide primarily merger and acquisition advisory services, and I'll explain that in detail as we go along. But we've been in business for 60 years, number one. Number two, we are international in scope. We have offices literally around the world, both organic offices as well as through affiliations that we have sponsored. I run the Columbus office, hence my ability to be with you today.
Yes.
Number two, and third, we are basically totally independent of any banks, law firms, accounting firms, and the like. So we have no conflict of interest when we're bringing advice to business owners, which is basically our clientele, as again, I'll explain a little bit more in the future. We are also a registered broker-dealer.
You have to be, right, to facilitate.
To facilitate, very good point, to facilitate any kind of a securities-related transaction. And when you're selling and or buying businesses, most transactions have a security component in their deal structure.
There's a lot of smaller business brokers that aren't actually registered,
Absolutely
right?
not. And people always ask me why. And the reason why there are so many even investment bankers in the middle market or business brokers that are not licensed and registered, which is what you are required by both federal and state statute, is because both the SEC and the state divisions of securities are so under-resourced they can't police the marketplace sufficiently well. We can all remember back Bernie Madoff not even being caught when he was delivered to the SEC by a competitor, right?
Absolutely. Multiple times I think they were informed.
Absolutely. So now think about the SEC or whatever getting down to a the lower private marketplace.
Keep talking. I'm gonna fix your mic so we can hear you better. Keep going.
Looks like we lost the battery, but hopefully
we are gonna fix it.
All right.
Let's get it in there. There we go.
Very good. Hopefully we're back live and we didn't miss too much. But anyway, so when you put those attributes together, basically our legacy, 60 years, the fact that we are an international organization, the fact that we're totally independent, and that we are in fact embedded within a registered broker-dealer of our own, it really makes us very unique in the middle market space.
Yes.
And the middle market, to try to explain to the audience that maybe is not familiar with that terminology, we deem that to be essentially companies that are generating between $10 million in revenue at the low end and $1 billion at the upper end. Now, quite frankly, Corporate Finance Associates specialty is focusing on the lower middle market. So think in terms of us being the players within the $10 million revenue to $200 million of revenue.
Absolutely. And I mean, $10 million is not all, we're talking about revenue. We're not just talking about net profit like the owner is making $10 million a year. No, I mean, even my father-in-law owns a medium-sized paving company,
And I don't think a lot of people would consider it, super wealthy, but he would probably fall into that category. I bet a lot of us know people that might be someone, maybe not lots, but someone, and that would qualify for who you are helping.
Exactly right. Yeah. There's an inverse relationship between the size of the company and the numbers of companies, right? Mm-hmm. So the smaller the numbers, the more there are. The smaller the revenues, the more there are. The larger the revenues, the fewer the companies there are. Yep.
Yeah. But it's just the small and the medium-sized companies that make all the jobs.
That's exactly
in
right.
our communities, or at least the net positive. We'll always see J.P. Morgan and them hiring and firing, but they're just about equal over time.
In fact, it's such an important segment of the marketplace that the Ohio State University, as you may or may not know, several years ago started what they call the Middle Market Institute. And basically, it's an academic effort to really understand the impact of the middle market on job creation and innovation throughout the country.
Yeah.
Extremely important impact, and an underserved marketplace, and typically not drawing the attention of academics. The academics typically chase the Fortune 500.
Sure.
Maybe they'll get down and try to understand the mom and pops, but that middle space has largely been untended, at least academically, until a few years ago when OSU got into it.
Sure. Because startups are cool just from the story standpoint.
Yeah.
And the larger companies, everybody knows their names, but the middle market's probably where a lot of the growth is. Plus, they have consistent enough finances to where they can actually engage and be traded or bought or sold or what's that, right?
It's an interesting transition space in the market, because when you start getting into higher ranges within that middle market, you start flipping from primarily privately held companies now to some larger percentage of publicly held companies. Mm-hmm. So it's in that gradation that you start seeing a real change, the inflection point in companies that can go public, can stay private. And there are different ways of, and I guess we're going to be talking about that certainly as we go along. But that's our audience and the kind of services that we bring. Maybe we could.
So who's a good candidate? I mean, I think I saw in there that you do multiple things, not just mergers and acquisitions or what.
A good candidate for us is a business owner, ideally within that revenue space we talked about, that $10 million operation to a $200 million operation. It could be an individual, it could be a family-owned business, it could be a business owned by a group of investors. Typically privately held, and ready for one of two paths from this point going forward. Okay. Path number one would be to grow by acquiring other companies.
Okay.
As you may know, it is very difficult to grow organically in a slow growth economy, as unfortunately we are experiencing today. And so many companies have come to the realization that either they're going to stay flat over time and not grow the value of the enterprise, or conversely go out and become an aggressive acquirer of other companies to get step functions.
And get that synergy from where there's redundancies between the two businesses.
Exactly right.
Yeah.
They grow the company, they experience the revenue and the cost-related synergies, they become higher EBITDAs, earnings before interest, taxes, depreciation, and amortization, an important word in our jargon.
Sure.
And so with that increased cash flow or EBITDA, they basically become a much higher valued company, so that if they want to go public, they're more ready to do that. If they want to continue acquiring, they can certainly do that.
And do you work with like financing and what so? Because I've been, in our industry, we see that there's more like business development companies. And I would think like if you're a medium-sized business, at a certain point, a lot of traditional banks probably don't know how to lend to you or what so, but you may need capital to grow, like say you're going into a different thing, or maybe you're not in part of the low growth economy, there's a higher growth, or like say with us, there's a high proportion of people that aren't using financial planning services, so it's not very competitive. Like we could grow if we could get out there more, but I mean, is that something that you help people as well with?
We do. The other path, just let me get to that, and
then
fill that out, is basically the company who is at the inflection point where, again, the owner, the family, the group of investors has decided that they want to exit the business. Okay, that's the flip side, obviously, of growing.
Sure. Cash out, basically.
Basically cashing out.
Yeah.
And we help in that regard too. And there are basically two ways to cash out. It's often not known by business owners that you do not have to exit by selling out entirely.
Okay.
You can certainly do that, and we help facilitate those kind of transactions
Sure.
by finding the counterparty, be it another strategic, which would be an operating company in our client space, or a private equity group looking to invest in that type of enterprise. They can either sell out entirely, or there's what's called a recapitalization. It's a fancy word in our jargon that basically says, or speaks to a private equity group typically being the counterparty,
Sure.
where you're the business owner, maybe you're 50, 60, 70 years old, you want to take some chips off the table, mitigate some risk, but you don't want to leave the business entirely.
Yeah,
You
'cause
love
like
the
it.
business, you
Yeah.
love the industry, you want to keep going at it. There's a way of bringing in a third party, typically private equity, a family office, small business investment company, like you just alluded
Sure.
to earlier, Phil, would be the counterparty to allow, again, the current ownership to take some chips off the table and then fill in the balance sheet, that equity slug, by outside capital.
Yeah.
Outside capital can, depending on who we find, can buy either a minority stake in the business owner's business, a majority stake in the business owner's business, or conversely, they could buy it all out.
Sure.
So there are a bunch of options depending on the needs and wants of the current business owner on how and when they want to exit.
Yeah, yeah.
Now, if you talk about now the service renderings in general, we talk about mergers, acquisitions, divestitures, recapitalizations I just described, financing. Those are the range of services that our firm will offer to these privately held companies to
But
help
they're not the
facilitate.
biggest part of what people are looking for most of the time. Yeah.
Most of the time, it's more of an M&A transaction. Hey, we need to either grow by acquiring another company, and they will hire us to find those other companies and help negotiate the transaction. Or conversely, we're ready to exit, at least in whole or in part. And again, we'll find the counterparty
Sure.
to basically address that path.
So obviously you guys are a lot more sophisticated than this, but I like analogies. So you
Okay.
guys are almost like a realtor for businesses, because you think about for sale by owner. How many people are going to come by and see your house?
Yeah.
Like, and is the contract going to be right?
Yeah.
Et cetera. Can somebody wiggle out of it, or did you get a bad deal? You guys are like that for
Yeah.
business owners to say, listen, we'll bring a lot more sellers to the table, or buyers, or
Yep.
vice versa
Yep,
on either side
absolutely.
of things, so that there's
Absolutely.
going to be more competition. You're going to get a higher price. It's going to be done right.
Yep.
Et cetera. So again, that's probably not perfect, but I think people have probably done multiple transactions with realtors, and they kind of get it if they've
Yeah.
used somebody and they're like, there's value in this.
Yep.
And then, of course, how many times are you ever going to sell business? So they're
Yep.
obviously not going to have a lot of experience in doing that.
The typical business owner in the life cycle of their business has never done a single transaction.
Yeah.
And we say it is essentially the most important financial transaction in a typical business owner's life, because
Absolutely.
most business owners have the vast majority of their net worth tied up in their business.
Yeah.
So think about that. I've never sold a company before. Most of my net worth is tied up in that company. Should I or should I not hire a professional to help me facilitate that sale? Unfortunately, there's a lot of empirical data that would suggest that a lot of business owners exit the following way. They either take a phone call from their major competitor, or conversely, they call their major competitor and they do what we call a proprietary one-off transaction.
But then there's no bid.
There's
Yeah.
no competition. They've not gone out to the marketplace. They have no idea whether the bid coming from that single source is good, bad, indifferent, and how to measure it there. So what we do essentially is help bring a company to market in a very sophisticated and smart fashion.
Yeah.
It's built around the concept that bringing your company to sophisticated buyers, be they strategics, and by strategics it's a fancy word we use for an operating company, maybe in the business owner's industry, maybe it's a competitor, maybe it's somebody that's downstream or upstream in terms of the logistics trail. Maybe it's somebody in an adjacent industry that would like to grow into this industry and kind of increase their market share within it. So all of those, so that cluster of business possibilities from the strategic area, we are going to go and do an outreach to.
Sure.
Building good marketing docs and going out and bringing their attention to our client. Conversely, we're also going to go out to what we call a financial buyer. And the typical financial buyer is private equity group. And private equity group, again, complements what strategics do. Strategics do what the client does and are often interested in expanding their geography, expanding their product line or their service set, and enjoying the synergies of bringing in a company that they can either strip out some costs, or conversely, they can bring some additional customers to and the like. It's a very nice synergistic mix. good, powerful financial things come out of those
Absolutely.
arrangements.
Do you sometimes like help people like say we need to clean up your balance sheet, so your earnings are to this, we need to change some
Yes.
things, this is going to be a year or two long process,
Very
or
good
you're going to
question.
lose a lot of value? Yeah.
In our practice, we will represent either the buy side, that's
Mm-hmm.
a buyer looking to acquire something, or the sell side, that is a business owner looking to sell or recapitalize their business. I personally have a lot of experience before I got into this industry 15 years ago from functions called corporate development within corporate life, where corporate development is essentially the internal investment bankers looking to do joint ventures, investments in mergers, acquisitions, and the like. We know what buyers are looking for. We know how they value businesses.
Sure.
And so when we work with a client, one of the first things we do is we give them counsel on how to prepare, if they're not yet ready to go to market, how to prepare their company to go to market to maximize the value they will extract from the process. So you're absolutely right. I mean, it's issues like you don't want to have any customer concentration issues, and if you do, you need to spend some time really basically eliminating that. Recurring revenues are always better than project-related revenues because there's less risk associated with that.
Yeah.
And there are a bunch of other factors, but those are a couple of
That's
examples.
what we just had one of our clients actually buy a business that I think like 70% was based on one. Now, luckily, he had something in the contract that if that one left and that one had gotten acquired and they moved to the parent company's distributor, and it was like catastrophic for that business. But there was luckily something in the contract that let him get out of it if that happened within a year. But yeah, absolutely. That is a risky thing that I don't think a lot of people would think about unless they've read or seen it happen.
Yeah. A lot of people, a lot of business owners make a very nice life for them and their families selling to one or two or three key clients that have stuck with them their entire life. I'll give you an insight. When a buyer takes a look at that kind of a company, it has essentially zero or little value. Because the first thing they're going to do is say, what's the probability that I'm going to be able to retain those customers, that they're there only because of the personal relationship that they currently have. And so you never want to be caught in a situation where you are so dependent on a small set of clients that you diminish the value of your company.
Absolutely.
It's counterintuitive. The business owner could be doing very well for themselves and their family, but to a third party coming in to take a look, the value is diminished.
Sure. It's like what we preach to all of our clients, diversification.
Absolutely.
Diversification.
Absolutely.
So maybe if you could, I think it leads into that, maybe give us an example of someone that you helped that people could relate to.
I'll give you a merger and acquisition example. This was a very well-established company interested in putting itself on the market. The three-person ownership team, a senior partner and two junior partners, were very interested in essentially exiting. There come a time of life for them that they wanted to retire.
Okay.
And they had a choice of either doing it on their own or hiring professional counsel, a professional investment banker like ourselves, to in fact do the transaction. They chose to hire us after they looked at a number of other folks for the attributes, the reasons that I described earlier. And we took them out to market, and we had a very, very interesting result. There was a cluster of bids around an X dollar valuation, but we had gone out with such a broad search, putting them in front of enough people from the strategic and the private equity community that we were able to create deal heat. We were able to create competition, known competition, because when companies are brought into a process, they know it's being managed by an investment banker.
Sure.
They know they have to sharpen their pencil. They're not just dealing with the business owner who's never done this before. They're dealing with professionals on behalf of the business owner. That automatically gets a step up in terms of valuation.
Absolutely.
You add competition to that, you get another step up in competition. And then there's a process technique that we always use when we bring companies to market, and that's essentially when we have first calls for offers, second calls for offers, best and finals, and it gets that deal heat up. We ended up being able to pull the buyer, the successful buyer, from an X to a 1.6X.
Wow, that's awesome.
So you can think about the 60% premium because of the process.
Sure.
They likely never could have achieved that on their own.
Now, I would say a lot of business owners might be weary of, if they're going through this, not wanting anybody to know that things are going on until a deal is finalized. But you can accomplish all that, even with all that deal heat
Yep, absolutely.
So, yeah.
It's one of the most, to your point, Phil, one of the most important questions, one of the first questions that a typical potential client will ask, and that is, how do I maintain confidentiality going through what seemingly is a public process? Number one, it's not public.
Yeah.
We understand we don't want your employees to be upset and leave. We understand we don't want your vendors to be upset and leave, your lenders to be upset and call their loans. A lot of bad things happen if it gets out on the street. Quite frankly, there are sufficient protocols in place, very well-tested protocols, that no one gets access to information until they have been screened, until they sign a confidentiality agreement or a non-disclosure agreement, and receive layers of information only consistent with where they are in the process. So it's a very, very well-controlled process. Quite frankly, in the years I've been in the business, we've never had a breach, and that speaks volumes, I think, even to the integrity of the other side. When you've got professional buyers coming from the strategic community and or the private equity community, they get it, they understand it, they appreciate the need for confidentiality, the need for integrity. We'll never bring another deal back to them
if they break it.
If they break it. So it's pretty well established. I'm not saying there are no breaches out there, but certainly we've never experienced it. So it's a good question, but I think we handle it very well.
So as we finish up, kind of tell people how they can get in touch with you if they're interested or have questions. Obviously, you can comment on the Facebook or YouTube, however you're watching it, and we'll try to respond, but let them know how they could get in contact with you.
CFAW.com is our worldwide website, /Columbus. We'll bring you right to the Columbus office. And if you go to our website, you'll find all my contact information there, including cell. And would love to be able to work with business owners and help them maximize their take from the marketplace. It's really a return on their entire life's work.
Absolutely.
They do it once. Let's do it right. We can help.
Absolutely. Well, thanks again, Bob, for joining us. We
Phil.
appreciate you having someone of your stature here to kind of educate us on a lot of things that we probably don't get exposure to. And thank you guys for tuning in again to our weekly live broadcast. We'll have a new one every Friday at 11 a.m. Tune in. Put your questions below, either on YouTube, Facebook, LiveStream. We'll get back to you ASAP. So thanks again. Have a super start to your weekend.